This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Tuesday, January 14th. Let's jump right into today's session. I have a lot to cover. It's going to have a premium section all by itself where I cover 39 bearish setups. But let's jump into breadth. Market still has 5 minutes to go. We had 107 new highs on the NYSE versus 291 new lows. 60% were advancing versus 37% declining. 77% of stocks are below their 50-day, and 55% of stocks are below their 200-day moving average. Every Mag 7 is red today, and I'll go through sectors in a second. Microsoft down 1.35%, Nvidia down 2%, Apple 0.71%, Amazon almost 1%, Google, Alphabet down 1.1%, Meta down 3%, Tesla down 2%. That is not going to look good on a statement. Looking at sectors, it was a mixed bag. You had utilities leading up to the upside, 1.3%, industrials up 1.1%, financials up 1%, basic materials up 1%, real estate up 0.97%, energy 0.75%. Whereas tech, consumer defensive was down 0.22%, consumer cyclical down 0.3%, tech was down 0.43%, communication services down 1.1%, healthcare down 1.44%. Now, if I had to summarize the day, it really was, I believe, a sneaky sell-off. We were up pre-market, and as soon as we opened, we sold off hard. Like right around 10:30, 11 o'clock, we sold off on the Dow. On the NASDAQ, we sold off immediately. S&P, we sold off immediately. The Russell led to the upside in percentage terms today. However, the NASDAQ and the S&P are basically unchanged for the day, but being up at the open and selling off, that's not good complexion if you add all of the Mag 7 being in the red. Now, we had PPI data come out this morning, and it said that inflation is softening, and that's why it initially rallied, the futures. But as soon as we opened, I was looking at the 10-year Treasury yield, and it was not budging south, because if it truly was, inflation was truly weakening or softening the rate of increase, TNX, or the 10-year Treasury yield, would have went south. And you would have seen a big spike up for Mag 7, for the Qs, for the SPY, and we just were not seeing that in the breadth numbers, in the breadth data. So it just reeked of a fake out. And I told the premium subscribers on Monday, whatever happens today on Tuesday, I expect the opposite on Wednesday. So although the Dow and the Russell are green and the Dow was up 200 points, which is 0.48%, we have weakness in the Mag 7. So I suspect almost a reversal. Whatever the CPI says in the morning with the bank earnings, we may see a sustained sell-off. Because today we tried to have a bullish rally and then got sold off, and at the end they tried to save the day. I suspect they're going to have much more difficulty saving the rallies or by the dip folks tomorrow. But I could be completely wrong. We'll see. And just looking at all the charts that I follow, I can only find like 8 bullish setups, and I can find 39 bearish setups. That's not a good ratio either. Let's keep peeling this onion. So what was strong, what was weak in the S&P and NASDAQ? In the S&P, you had Celanese up 5.3, United Rentals 5.3, Vistra Energy 4.8, Builders FirstSource 4.7, GE Vernova 4.6, Medtronic 4, Constellation Energy 3.9. In the NASDAQ, you had MicroStrategy 4.5% to the upside, Constellation Energy 3.8, PayPal 3.2, CDW 3.2, Atlassian 2.9. What was weak? You had Eli Lilly in the S&P down 7.1%. Charles River Labs 6.3, Moderna 5.4, Las Vegas Sands 5.2, Biogen 5.1, Regeneron 4.1, West Pharmaceuticals 3.4. In the NASDAQ 100, you have Biogen again, Regeneron again, Meta down 2.9, On Semiconductors 2.1. Free members, continue to watch the 10-year yield, Japan, and the macro, the Mag 7. I know I sound like a parrot, I'm just repetitive, but these signals give you an indication of intention. And intraday breadth will definitely show you Wall Street's intention. Premium members, please stay on. I'll cover macro and the 39 bearish setups. That's my train.
Stand clear of the closing doors, please.